gentlemen, good day and welcome to the Q2 FY2024 conference call of Cyient Limited. As a reminder, all participant lines will be in listen-only mode, and anyone who wishes to ask a question may enter star and 1 on their touchtone phone. To remove yourself from the queue, please enter star and 2. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is recorded. I now hand the conference over to Mr. Krishna Bodanapu, Executive Vice Chairman and Managing Director of Cyient Limited. Thank you, and over to you, sir.
Thank you very much, and good evening, ladies and gentlemen. Welcome to Cyient Limited's earnings call for the second quarter of financial year 2024. I am Krishna Bodanapu, Executive Vice Chairman and Managing Director. Present with me on the call are Mr. Karthik, CEO and Director, and Mr. Prabhakar Atla, President and Chief Financial Officer. Before we begin, I would like to mention that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. A detailed statement in this regard is available on our investor update, which is emailed to you and also posted on our website. This call may be accompanied with a earnings call presentation, the details of which have been already shared with you. Coming to the quarter, some of the highlights. Firstly, I'm excited that Prasad has joined our board as an independent director, and we look forward to benefiting from his experience. Nitin is a dynamic, accomplished business leader who has over 25 years of experience and has developed and launched and operated new business verticals in semiconductors, chemicals, energy, and clean energy across geographies. As you know, sustainability and the associated industries of energy, utilities, mining are very important focus areas for our business, and I believe that Nitin will provide a unique perspective on solving sustainability challenges in these industries, having worked with some very large corporates. So we are excited to have Nitin join our board, and please join me in welcoming Nitin to our board. I'm also proud to announce that we won 2 awards at the NASSCOM Design and Engineering Summit. One was in the area of enabling the blue economy via last-mile hydrogen fuel delivery for marine and automotive applications. And the second was designing and engineering the world's most fuel-efficient aircraft engines. Again, these are areas that we take a lot of pride in, and we put a lot of effort in, because sustainability and the related industries are a big focus area for many of our customers and for all of us in general. And I'm very proud that we have been recognized as leaders and for having done some cutting-edge projects in these areas. In addition to these awards, we also received the Modern Network Management Award at the 2023 ESRI Structure Management and GIS Conference. ESRI or ESRI, local leader in local intelligence, and this recognition is an acknowledgement of our capability and powers in this space. Before I hand over the call, I just want to highlight that the last quarter has seen the aerospace business grow 27.5% year-on-year. As many of you know, and many of you have followed us for a long time, aerospace is a key part of our business, and it is a business that has gone through a significant challenge, especially in 2019 because of some industry-specific issues, but of course in 2021 and parts of 22 because of the impact that COVID has had on travel. So I'm very proud now to report that not only has the business grown 7.5% compared to the same quarter last year, it has also grown 6 consecutive quarters. That gives me immense confidence that we're in a very strong footing, one of the most important, if not the most important vertical, has a huge bearing on our growth, and we're clearly the acknowledged leaders. Having said that, as you have followed some of our competitors, the communications industry is going through a bit of a lull. In our case also, there was about 11% degrowth in communications for the quarter under discussion. But we're quite confident that this is a short-term blip. So in summary, I would say that I feel very, very confident about that we've done on the portfolio and where things stand. Confidence will now translate to some very good visibility for the rest of the year, which I will allow Prabhakar Atla and Karthik Natarajan to take you through the more details. That I would like to hand over the call to Prabhakar, who will take you through the financial performance. Prabhakar.
Thank you, Krishna. Hello, everyone. I hope you're all doing well, and I hope you're all having a good day. The management team of Cyient is joining this call today from our offices in Hyderabad, India. I would like to first update you that we're having a present day at moderate 27 degrees Celsius, humidity about per hour, and visibility is clear 25 kilometers. All of these, I guess, can be considered as healthy operating metrics of a pleasant day, especially in tropics. They're even perhaps what are typically termed as lead indicators for present unit. With a small digression, which if your pardon, please allow me to present the financial results of Cyient for Q2 of FY2024. Before we start, just as a recap from our previous earnings call, i.e. the Q1 FY2024 earnings call, Cyient's business has classified since Q1 FY2024 segment you can see on the screen. Presentation now and discussion now for Cyient segment only. All numbers, unless mentioned otherwise as group, are for Cyient DET only. Some of the clear period numbers have not been reclassified given the impact on DET's segment. With a quick recap, let us move on to the next chart in a dashboard format for Cyient DET performance. Before I walk you through the commentary, let me summarize that we believe that our Q2 FY2024 is balanced performance, which is broadly in line with our expectations and is also tracking to the evolving industry scenarios and dynamic macroeconomic scenarios. In terms of revenue, Q2 FY2024 US dollar revenue for DET stood at $178.4 billion, a growth of 1% quarter-on-quarter constant currency and 15.1% year-on-year in constant currency. In rupee terms, this revenue stood at 1,476 crores, a growth of 1.5% quarter-on-quarter and 2.5% year-on-year. We have two key growth drivers behind this performance. Firstly, our core segments contribute strong growth, QOQ and YOY, including the key segments aerospace, automotive, and sustainability. Our key clients, top 10 and top 50, continue to witness strong QOQ and YOY growth. At the same time, Krishna mentioned earlier, we do see softness in communication space in the short term, macroeconomic scenario, and softness played out in this quarter for connectivity segment. Rajan will provide a commentary on topics later in the call today. In terms of EBIT margin, Q2 FY2024 DET normalized EBIT margin stood at 16.5%, highest in the last 11 years, and grew by 47 bps quarter-on-quarter, a healthy 406 bps year-on-year. I would also like to mention the QOQ expansion of 47 bps that we had in Q2 is on the top of the 93 bps QOQ expansion we have seen in the previous quarter. In terms, Q2 FY2024 DET normalized EBIT is highest ever, it's 244 crores, a growth of 4.5% quarter-on-quarter and 62% year-on-year. The continued margin expansion is the impact of wage hikes, driven by improvements in our operational performance, along with cumulative benefits coming in from the optimization activity undertaken in the previous quarters, we have addressed previous earnings call as well. Q2 FY2024 PAT, Q2 FY2024 normalized PAT for DET and this 3 crores, translating into a normalized PAT growth of 1.5% quarter and a healthy 70.2% year-on-year. Translates to a normalized PAT of rupees 16.77 Cyient DET. In terms of free cash flow, Q2 FY2024 DET free cash flow stood at 154 crores, a growth of 156 year-on-year, and this translates into conversion 29% on normalized PAT for Q2. As those charts, I would like to also draw your attention to balance among several metrics. Revenue growth of over 17% year-on-year in constant currency terms, EBIT expansion of 400 years, normalized PAT grew 7% year-on-year, while retaining focus on improvement, we also grew by 166%. And hence, my opening comment on balanced and healthy performance at the beginning of the presentation. In terms of group numbers are a combination of all three segments we spoke about earlier, and I'll just call out a comment. At $216.9 million, revenue for Q2 FY24 grew by 22% year-on-year in constant currency. And Q2 FY24 normalized margin 14.6%, up by 232 bps year-on-year. Q2 FY24 PAT stands at Indian rupees 183 crores, up by 50% year-on-year, while the expenses degrown year-on-year 7.7%, going to planned cash consumption cycles seen in DLM business, which we will recover in H2 of FY24. I'm also very pleased to inform you that we announced interim dividend payout Indian rupees 12. For the client board, the management team, all our clients across the globe, I would like to thank all the investors for continued support, the valuable counsel, and very, very importantly, your kind trust, for which we are very grateful. Thank you all for your time, for your attention, and for your interest. I will now hand over the call to Mr. Karthik Rajan for an update on the business performance outlook.
Thank you, Prabhakar. Hey, everyone. All of you are having a fantastic season, especially in India. And I'm pleased to share details of the quarterly performance as discussed by Prabhakar and Krishna. And to say that the 11th quarter of growth out of 13 quarters that we have been reporting for the past 13 quarters from Q1 of fiscal 21. We had 2 quarters of flattish revenue and 11 quarters of consistent growth that we have seen with in the steady performance for the quarters. Having said that, I'll just pick up 2 of the key columns here, and the third from the left and first from the left. They are essentially the constant currency numbers for 4 of the business segments. We have talked about bringing a balanced portfolio. I think this is really starting to pay off well. And if you look at transportation, which is shown 2.7% quarter-on-quarter constant currency growth, about 20.5% constant currency growth year-on-year. And as Krishna mentioned, the aerospace continues to see the 6th quarterly growth. And for this quarter, it stands at 27.5% growth year-on-year. Connectivity, seen a softness in Q2, has grown by 8.1% and year-on-year at 12.6%. The stability, which is starting to pay off well based on some of the investments that we made over the last 18 months, and has grown by 4.9% quarter-on-quarter and 21.6% in constant currency year-on-year. If we were to normalize it for an comparison, which is close to about 20% that we've seen the growth on the sustainability business. 2 growth areas, which is pricing of semiconductor, medical devices, automotive, and tech, has shown a growth of 5.7% quarter-on-quarter and with 5.1% year-on-year in constant currency, translating into overall deal growth of 1% in quarter-on-quarter and 17.1% year-on-year. We also have seen robust growth in our order intake, and which has grown 40% year-on-year, while seasonally Q3 and Q4 are better than what we have seen in Q1 and Q2. And gives us confidence that there is definitely stability that is coming back for most of our businesses, except for some parts of the communication business, which we'll talk about it in the next few minutes. Our offshore revenue mix stands at 44.2%. We have closed 5 deals in terms of large deals at $51.4 million total contract potential, and 3 of them from sustainability, which is coming with digital factory and plant engineering and asset management around the sustainability vertical, and 1 deal on patient health monitoring from healthcare and health centers, and 1 deal for an American OEM for a certification support that we are extending to them. Go to the deep dive of each of the business segments and continue to see growth across the board, and led by 3 pivotal areas we started working on for the last 2 years,
and digital engineering, autonomous world, and sustainable finance. I think these are the key pivotal areas we are putting on. I think that's the continuous phase of that. And while we continue to see macro challenges, the geopolitical issues, and conflicts arising from the Israel Hamas, and what we have seen the last 2 years from Ukraine, Russia, that continue to pose challenges. But we are still confident about what we see the future, which is bright, and we are confident about how we will create a sustainable growth for many years. And to start having transportation, as air travel keeps growing, aerospace industry continues to embrace more of digitalization. They need to deliver more aircraft and engines, and the global demand for air traffic is likely to double in 15 years, and this is taking 23 years in the previous doubling cycle, and now it may happen in the next 14 to 15 years. And plus, some of the growth that is happening through the conflict that is happening globally from the different sides, and these two are essentially driving the growth as far as transportation is concerned. Rail would be moderate, and we still see growth based on software and digital areas from rail. Connectivity, and this has taken a challenging year for many of our peer companies as well. And this is led by some of the 5G investments still not paying off, and also their own investment towards fiber investments have been slowed down. While we expect government spending around RDOF and key programs will continue to drive the growth starting later this quarter or early next quarter. And we are expanding on our acquisition that we make from Portugal with Celfinet in North America and Australia markets. I think that is paying off with an entry into Australia operator in the last quarter. Sustainability, I think this continues to really build momentum as we expected, and led by energy transition and some of the new age minerals, lithium, nickel, zinc, I think continues to drive significant demand, and this is led by the energy transition which is happening across global segments. And we also see the utility market, which is being transformed towards the grid normalization, digitization, and that's going to be a biggest growth for the next 3 to 5 years. Apart from hydrogen, ammonia-based green energy and carbon capture, utilization, and storage, continue to see the growth, and we'll talk about some of the key wins in many of these segments in the next few slides. New growth areas, this is still led by automotive. We have seen a robust growth in automotive business, and we continue to see growth around electrification, autonomous and connected vehicles, and we have seen momentum in some of these areas. And also in semiconductors, where we have seen a softness over the last 6 months due to the macro issues, and we do expect the demand coming back by later part of this year. And this is going to be led by high performance computing, artificial intelligence, and auto segments that are likely to drive the growth from semiconductors. Just want to put a few examples of deals that we won last quarter, and semi-autonomous drive solution and obstacle avoidance for an industrial construction equipment. And this is an interesting project where we are trying to build autonomous construction equipment for a customer. And sometimes we are really engaged on working on a loan program for a industrial customer. And also moving on, technology enhancement for the in-car navigation system and using embedded services in Android also on connectivity. And the customer and management experience through technology and analysis from knowledge management solutions and through copper and fiber network and carbon capture solutions, balance of plant for hydrogen-based green ammonia production. And we move on to the next slide. A data platform that enables customers to stream real-time onboard in terms of multiple sources to provide insights and predictions. Scientific engineers, we also partnered with Microsoft that we announced in the last quarter. And this is paying off with generative AI-based programs that we are taking to our customers. And this is one such thing that we have to report from the last quarter. And platforms and customer experience, and we are developing an asset management solution related to a PLM system for customers. And we also have won a project on AI-powered software testing using the solution we built called SkyFast. And this is for a framework that is built for automated system and software testing, and which is AI-powered. So with that, I will just conclude from bit about what we see the business to shape up for the rest of the year. I come back for Q&A before I hand it over to
Should we
24 guidance, and we are keeping our 15-20% guidance that we have given earlier. The commentary that we expect it to be around the lower end of the range. And EBIT margins, we have guided about 150 to 250 basis point improvement at fiscal 23, and we are holding on to the same numbers here. That will throw up a question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Ruchi Burde Mukhija from Elara Capital. Please go ahead.
Thank you. Many congratulations for the resilient performance. I have two questions. First, what has led to the margin expansion? And the second one, could you please share what you see as the outlook for your communication vertical as we move ahead?
Ruchi, thank you very much for the question. Thank you for joining the call. Our quarter-on-quarter margin improvement has key drivers. First is that we have an improvement in the operating performance. Our gross margin improved quarter-on-quarter. This is happening from improvement in utilization and also continued rate hikes, which is focused in the previous quarter. We continue to have benefits from indirect cost optimization, which we have done previously. These two are key drivers quarter-on-quarter, continued margin expansion. I hand over to Karthik to address the question on communication.
I think we have talked about last quarter, and we said we do expect softness on the communication segment driven by the broader capital cycle that has happened over the last 2-3 years, and is taking a breather with higher interest rates and probably business sometime before it starts maturing. Having said that, and due to the fiber business that we do have a significant exposure to, and are starting to see pockets, and there was a slowdown that we did not anticipate earlier, and some of those projects which have been put on hold, we do expect that they should really jump back in early Q4. And we also view at this point of time H1 to H2 will be flat in terms of communication business, and we will start seeing some of the growth by early next year, and when I say early next year, the next financial year.
I can just also add that this framework, the largest customer in communication continues to grow quarter-on-quarter and year-on-year.
Thank you.
Thank you. We have our next question from the line of Sulabh Goila from Morgan Stanley. Please go ahead.
Yeah, hi. Thanks for the opportunity. So first question is more of a clarification from one of the remarks that you made. So is there any sort of an impact from the geopolitical issues that we are seeing in the Middle East on the sector or Cyient anyway? So just want some clarification on that.
Yeah, absolutely. On the Cyient DET business, we do not have very much business in on PLM, we do have business in Israel. And about 20% of our revenue and 20% of our supply chain from companies in Israel. So there is a bit of dependency. Of course, the first concern that we had was the safety of our employees. Not that we have many, but we have a few in Israel in the PLM business, of course, our suppliers and customers. So first, that was the first concern, and I'm glad to say that everybody is safe, though of course everybody has an impacted family member or an impacted colleague. Having said that, we don't believe that there is going to be much of an impact on the DET business in any way in Israel. Similarly, on the PLM business, like I said, 20% of the business comes from there, but we're also quite confident Israel is a very resilient country. There is going to be significant our employees and their families are really safe.
Understood. My second question is with respect to the guidance that we have, in which we tend to guide towards lower end. So, for us to the bottom end of the guide, the aspect, if I'm not wrong, is upwards of 10% in the next 2 quarters. Just trying to understand how confident are we in terms of delivering that sort of a growth rate in the environment we are in, and whether you would expect that to gradually up, which would mean that 4 would be better than 3. Just some understanding there.
What I said, our order intake has grown 40% year on year, and this is led by from aerospace and sustainability. And we do expect that these two will continue to grow for both this year. That's the confidence on which we are trying to hold guidance to the lower end of the range.
Understood. And then we expect it gradually pick up growth in Q versus Q?
I hope so, yeah.
Okay. And then my last question on the margins bit, we are already at 250 basis point higher than last financial year. So just trying to understand, given that we are expecting strong growth in 2H, are there any margin headwinds that we are facing due to which we are keeping the margins flat from here on?
Still holding on to the previous margin guidance. There is still some work to do for the rest of the year. So we'll hold on to the previous guidance we have given. As we work through various things, we have to work through for the following 2 quarters.
Sure. Thanks for taking my question.
Thank you. We have a next question from the line of Kawaljeet Saluja from Kotak Securities. Please go ahead.
Hi, I have a couple of questions for Karthik. I think the first question is that you have seen the recent announcement of Ericsson, or other comments of Ericsson, wherein they expect network spending to remain muted in calendar year 24 as well. Now, through that, I think we do have an exposure to that market. Now, assuming that market remains muted, do you think that the impact will filter through your communication performance, or are there offsets available?
Sure. Thanks for the question, Kawaljeet, and I'll answer this in 2 parts. One is we have made an acquisition called Cyient and about 15 months ago, and we do have wireless side of the business, and some part of the business which got impacted in Q2. We expect that part to recover in Q3 and Q4 as we see today. And because of some of the spend that is required from the customers in UK and Europe, and led by the platforms that Cyient team has been able to build over the last 3 years, and that has been definitely successful with many of the customers, which helps in reducing the cost of operation. And 2, they are also supported by the energy savings platform, which is the secondary one that they worked on for the last 2 years, which is more relevant than ever before because of the energy crisis that is seen in UK and Europe. So those 2 things would lead us to see a kind of growth in Q3 and Q4. The fiber side of the business and significant capex that has been budgeted by the government about 8 months ago, and it's being distributed to all the states. I'm talking about in the US, and that is likely to start getting into contract awards later in Q3 or early Q4. And we also expect that funding will drive at least significant growth over the next 12 months on the fiber spending. And we are working on that. Customers who are spending on their own, I think that is going to be curtailed in the near term, and to expect that government-sponsored or government-supported initiatives will help them to spend that money over the next 6 to 12 months.
Okay, that's helpful, Karthik. The second question is that, any line of visibility on the refresh of the narrow-bodied aircraft platform. And let's say if you don't have visibility, then, without that, what's the kind of runway and longevity of growth that you can have in aircraft?
Yeah, so I think we still don't have a clear visibility of when the narrow-body refresh will happen, and it's definitely due. And at the same time, you have geopolitical situation. One is doing very well. Unless there is a compelling reason why both of them need to really get into a new upgrade. So that may probably happen over the next 2 to 3 years. We are still waiting for a firm decision from one of them soon. I think that will force the other one also to follow suit. And meantime, what is likely to happen that with spiking in security issue and whether it is aftermarket, MRO, all of them is likely to see some momentum. And we do expect the defense thing will continue to rise over the next 2 to 3 years, given the conflict situation that we are seeing across many geographies worldwide. And we expect that will probably take the growth for a while. Having said that, the commercial side of the business have not really fully recovered, and the same challenges still remain, and that needs to be resolved for the next 24 months. So we hope all of this will start converging into some of the new upgrade programs in the next 2 to 3 years to continue to grow beyond that.
Not that way. Thanks a lot, Karthik, and wish you the best. Thank you.
Thank you. We have our next question from the line of Mohit Jain from Anand Rathi. Please go ahead.
Yes, sir. First is on the pricing benefits that you spoke about. So is it complete as of Q2 or we should expect some benefits to Q4 as well? And a related thing is, should we assume pricing benefits are largely in Aero or is it broadly spread? And then I have a follow-up.
So there is still some more work that is left for us to. Oh, thank you for the question. There is some more work for us to do to see that we continue to receive the price benefits. I will continue working on that. To your second question, they're not specific to aerospace only. The broadly spread across the system.
Okay. And the second was related to furloughs. I think you spoke about some put on in Q3 and then Q4, or do you expect those to be more evenly spread given we are anticipating telecom recovery?
Yeah, Mohit, we have a clear view on how the furloughs would play out. And given the demand situation on the aerospace side continues to be robust, and we don't expect to be any different as compared to what we have seen last year. And the supply chain issues that have taken the industry for the last year.
I'm sorry to interrupt, sir. You're not clearly audible. Can you come closer to the microphone?
Is this better?
Yes, sir.
Okay. So I was saying that is Mohit, we don't have a clear view on the furloughs yet, and the aerospace industry has a robust demand, and see, as all of us are experiencing on a daily basis, I think most of the flights are running, and probably the capacity is still not available to meet on that is rising on the aerospace domain. So that would really require some additional work to be supported. So we still hope that some of the projects will still be held during the holiday season. And we don't have clear view. We will kind of keep you updated. Just to share additional information, we do expect Q4 to be better than Q3, and maybe we would probably go towards Q4 more than Q3. And don't expect any impact on the furloughs.
And you're also anticipating some communications vertical also in Q3. Is that what you said earlier in one of the remarks?
I would say it will recover by Q4 and expect the H1 on the communication vertical.
Perfect, sir.
Thank you. We have our next question from the line of Sandeep Shah from Equirus Securities. Please go ahead.
Yeah, thanks. Thanks for the opportunity. Sorry to again ask question on guidance. How confident are we even for the lower end of guidance? Because one of your peer has actually downgraded, closest peer has downgraded its guidance for FY2024 with expectation of macro impacting the client decision in the last few weeks, which may impact the growth in the Q3, Q4. So my question is, what are assumptions in terms of ask rate of 3.3% bounded Q1, Q2, even grow at 10%? What are the assumptions taken? Because one of your statements on communication, you said that 2H for communication would flattish versus 1H. Are you taking in Q-on-Q growth in the communication?
Yeah, I don't have specific to offer on the communication for QOQ, Steve. But like what I said earlier, and we have seen our order intake growing 40% year on year. This is essentially led by transport and the sustainability segment. Since sustainability, we said mining and energy both are looking good, and mining customers have period because of the pricing issue, but that is also making them drive some cost out, and that would help us for the next 2 quarters. And for the energy side, some of the programs that we already won and we are likely to win during Q3 would help us to grow for both Q3 and Q4. So that's where our confidence comes from. And we have not assumed any disproportionate furloughs from aerospace for Q3 because of the domain, because of the demand situation, and how our customers are asking us to provide additional help during this quarter.
Okay. And Karthik, just wanted to understand, do you believe CY24 could be the year where new engine for aerospace design phase could be launched, or it may be in CY25 rather than CY24? And will it elevate the growth prospect of aerospace starting from next year?
I'm not sure whether there is any new program that is going to be announced unless the OEM is going to lead the way. And there are multiple concepts that are being worked upon, and there is no firmness in terms of specific program launch. And I would also add on to top of that, there will continue to be derivative programs that will happen as the need to reduce emissions and increase the efficiency of the engines, and some form of electric supported engine which will reduce the capacity of the engine that is needed. And I think the sustainability would drive significant changes to the aircraft and the engine programs. And that is where we see the near term, as well as the MRO and aftermarket support. And with most of the aircraft running over time, and we maintain and support it, and this would be the growth engine that we see for the near term.
Okay. And the last question, Prabhakar, just wanted to understand what tailwinds which would be there in the second half, especially on the wage hikes, any pending wage hikes in the second half. And one of the participants has already asked, I think first half we are at 16.3 versus uptrend of the guidance at 16.2 at the EBIT margin. Is it fair to assume actually still there is an upward bias in Q3, Q4 versus first half margin?
As we spoke previous call, the wage hikes still are annualized, and so expect to see some more wage hikes be coming in next 2 quarters. There is some more work to do on the price increases in the case and other operational levers to work on. Therefore, I'm seeing a number of moving parts out there. We are very confident of the range given in the previous call, and at this point in time, permission we will stay with guidance range.
Okay, fair enough. All the best.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We'll take our next question from the line of Nilesh Dhani from BOI Mutual Fund. Please go ahead.
Hi, thanks for the opportunity. My first question was from a little longer term perspective, from a 2 or 3 year perspective, considering demand for MRO, etc. What can be the revenue assumptions directionally, not quantifying, not try to quantify it, directionally can be expected beyond Q4, or you believe this MRO requirement is just the interim period and could see some declining trends?
So, Nilesh, I would say that we don't have any view for fiscal 25 yet. As we start building up, we'll share the details with you. But we do expect that it will last 2 more quarters before it really flattens out. And because of what I shared on the commercial as well as defense program, and one of the large aircraft which we put into service about 7 to 8 years ago is coming up for service, and they will get the first engine being serviced in this quarter. And then in the next 5 years, they need to service about thousands of engines. So essentially means there could be a short, medium-term demand continue, and we do see that we are able to grow at double digits. We don't have any specific firm view of whether it will be in teens or early teens or late teens. We are not able to make that assessment yet.
Okay, that's helpful. Second question was on the transportation piece. So there were earlier comments that Europe, etc., rail department or works towards that is seeing some basically bottoming out. We wanted to understand after bottoming out, are we seeing any trend of growth or stays there itself?
What is happening is for many of the governments, they have a fixed budgets and they need to really prioritize where they need to spend on. With some of the challenges that are seen over the last 2 years, I think homeland security or defense getting prioritized over other public infrastructure. And that is broad view that we have. And there are programs that have been won by our customers. They're waiting for clearances or funding to be approved for them to start the program. So there could be some unpredictability in the near term, and because of what we're seeing on a broader geopolitical issues seen globally.
Got it. And one last question would be on the order wins and revenue conversion. A lot of peers in the IT services comment that there has been some delay in offtake of those recent deal wins. From a client perspective, these wins want to understand how is it transitioning into the revenues for us.
Yeah, I think while they do take time to make decisions and which may get moved to the right and there be delays, but once they take a decision, they want to execute them faster. So we have seen both sides of the coin where some of the programs are shifting to the right. And once they made a decision, they want to make sure that the timelines don't change for the end date. So they really want to execute them faster. So which is definitely what we see, and there will be uncertainty around this based on higher interest rates and the inflation being high, and everybody's trying to prioritize certain investments for the near term as compared to the long term. And those decisions are on a regular basis, and we don't see any change in that over the last 2 or 3 months that we have seen. But never know how things will pan out for Q3 and Q4, and we don't know whether it would decrease the interest rates again, and would it really create a soft landing or hard landing. There is a lot of discussion that are happening around the world. So we don't know how things will pan out for Q3 and Q4. And based on our current confidence, and we do see that once the project is awarded, we want to really put them on a faster execution time.
Got it. Thank you so much for replying to all questions and all the best to your quarters.
Thank you. We have a next question from the line of Shraddha from ABSEC. Go ahead.
Yeah, hi. On the transportation bit, in one of the large rail transportation clients, we were seeing higher offshoring, which was in revenue for us. So have we gotten to a stable run that account, or are we seeing the impact of higher offshoring in that particular account?
So, Shraddha, we don't want to respond on specific customer-related issues. And I would just, the broader comment that I gave for rail is still valid. And we do see some uncertainty because of the project start from their customers. And that's one of the key issues that is in the segment. And two, there are some specific customer issues that are being merged and integrated, and some of them have gotten approval to get it integrated. So that's good, part and parcel of the regular routine task. And don't expect any significant change in the near term as far as the business is concerned.
Okay. And on the new growth area, how big would it be in new area, and how do we see the visibility of growth rates in auto going into?
I think we do have an aspiration of getting to be at least about double-digit percentage to the revenue over the next years. I think that's definitely our aspiration, and we have seen growth as we announced deals last year, and we have talked about one of the perception system we are building this quarter, and we continue to see across the embedded digital services, cybersecurity, cloud, I think those areas are continuing to see interest from automotive customers. Hope this will continue for a few more quarters.
Right.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Krishna Burandabu for closing comments. Over to you, sir.
Thank you. And thank you very much for your support, ladies and gentlemen, and taking the time out to be here this evening. As you know, we're facing some very uncertain times in the world with some of the geopolitical issues that are going on. But I want to assure you that we've built a very robust portfolio and also we've built a very de-risked portfolio. As many of you know, while we've had some challenges in aerospace previously, there were other businesses like comms that back, and now that there are challenges in communications, aerospace is really picking up the slack. So I just want to also highlight that we feel quite confident that we've built a de-risked portfolio. Karthik has said there is some very good visibility towards the guidance that we are providing. So thank you very much for all the support that you have provided. I also understand that it's been a busy couple of days with a lot of other calls. But may I just take a moment to invite you to our Investor Day, which will now be held on 8th December 2023. It will be an all-day session for those of you invited who attended our previous Investor Days. You will recall that it is a great platform to understand our evolution, performance, aspiration, and execution plans. On behalf of the entire Cyient team, may I extend our warm invitation to all of you to join this event. It will be our pleasure to host you at the event and hear your perspective and feedback. Our team will be in touch with you to coordinate the logistics. Thank you once again. I look forward to seeing you in December.
Thank you. Ladies and gentlemen, that concludes this conference. Thank you for joining us. You may now connect your lines.